Hello my friends, I'm Gyanendra and I'm here with financial education video, and today's topic is fixed deposit. We all know about fixed deposit and we all want to grow our money, the saving that we have. We like to invest, and the first thing that comes to our mind regarding investment is the fixed deposit. The certain points we have to keep in our mind when we invest our money in fixed deposit. Fixed deposit from where? Banks, post office. These are the two institutions that comes to our mind. But there are other options too. Fixed deposit can be done with NBFC, HFC, companies, that is called corporate deposits, cooperative banks, small payment banks, and yes, from the private banks, public banks, as well as the post office. What is NBFC? NBFC means non-banking financial companies. These are non-banking companies. These are non-banking because they do not offer saving deposits or current deposits to the public. They are not allowed to take these deposits from the public. They have no license for these types of deposits. But they provide loans and advances to the people. That's why they are called non-banking. They require fund to provide loans and advances, so they take fixed deposits from the public and at the same time pay higher rate of interest. The interest rate is better than the banks or other institutions. HFC, that is housing finance companies. Again, these are companies which provide loans for housing or apartments. They do require fund for providing such advances for buying houses or apartments. So they do take fixed deposits. There are big companies like Reliance, Tata, so on, who accept fixed deposits from the public. All these companies provide better rate of return. The return from these fixed deposits are better than the other fixed deposits. That means fixed deposits from the banks or post offices. But yes, we need to be cautious while investing our money with these companies. Before investing our money with these companies, we have to find out their credibility, their reputation, the goodwill of the management, the good name of the management, the credit rating of the company. Credit rating should be AAA. That is considered safer. And we can Google it out to find out the credit rating of these companies. If we are satisfied with all our research, we can go ahead with the investment in fixed deposit with this company. Now, when it comes to investing in fixed deposits of banks or the post office, following points should be kept in our mind. Interest rate. Whichever banks gives you better interest rate should be chosen. Right? And there are two types of interest, simple interest and compound interest. So you have to see the frequency of compound interest, and if there is an option between simple interest and compound interest, we should go for compound interest. The duration of fixed deposit. Longer the duration, higher is the interest rate. This is not so always. Longer duration does not mean higher rate of interest. To find out which duration offers you maximum rate of interest, you have to check the interest table or the interest chart. You can go to the bank website and find out, or you can go to the bank, ask for the chart and take their help to find out which duration gives you the maximum interest. The period for fixed deposit is as low as 7 days to 10 years. So any duration can be chosen, but this duration will depend on the maximum interest rate that is paid to you. Choose the duration which gives you the maximum interest Third one is safety and security. Yes, banks fixed deposit or post office fixed deposits are secured and they are considered as safe investment. Pre-withdrawal condition. This is very important. Are you allowed to withdraw before the maturity period? Can the fixed deposit be broken easily? What is the penalty for closing your fixed deposit before time? This needs to be considered because normally there is a penalty for a premature withdrawal, and this penalty ranges from 0.5% to 1%. You lose this interest 0.5 to 1%. Say for example, the bank had agreed to give you 6% rate of interest, but since you are closing the fixed deposit before time, the bank will pay you 0.5 to 1% less. So now the bank might pay you 5%. So you are losing 1% interest. Another important point is the tax implication. Interest earned from fixed deposit is added to your income, is considered as income, and tax has to be paid on this interest. And the rate of tax depends on which tax bracket do you fall in. If you fall within the tax bracket, you will pay tax on this interest, and if you do not fall within the tax bracket, you need not pay interest on this tax. The rate applied to the tax bracket you are in is the rate of tax for this income, that is interest income. Now the next point is, if you would like to increase your return, then you can take your fixed deposit in the name of senior citizens of your family member. Senior citizens are given extra interest, that is 0.5 to 1% more interest is given to them. So if the fixed deposit is taken in the name of senior citizens, then your return from the fixed deposit will be more. These are the points we all need to keep in our mind while investing our money, our saving in fixed deposit. In my next video, I'll be talking about whether to have one fixed deposit for the entire amount or divide the amounts into 2 or 3 parts and take 2 or 3 fixed deposits. Thank you.